So this is a very, I think, cool panel because we have a bunch of people who are looking broadly at this industry, but looking at it from very different angles. We've got the corporate investors from ADM and Tyson, and we have the VC investors. I think this will be a great way to get a pretty broad understanding of things. So maybe we can just start by going through, introduce where you're from. Everybody can see it up on the screen, but just mention your name. And just, I guess, start with how many investments you guys have made in this realm. And I'm particularly interested in if you can break it down between plant and cell-based, how many you've made each there to get this conversation rolling. So, Tom.
Yeah, so good morning, everyone. Tom Mastrobuoni, CFO for Tyson Ventures. We've made 9 investments in our portfolio to date. We have 1 exit, which was Beyond Meat, and no, I don't want to talk about it. We have 2 cell-based investments in our portfolio, and we have 4 plant-based investments remaining in the portfolio.
Hi, everybody. James Joaquin from Obvious Ventures, based here in San Francisco. And we are the 2nd largest investor in Beyond Meat, and I do want to talk about it. Very excited about that. As a firm, we've made over 60 investments, and 6 of those 60 are in the food and nutrition category. And we're 100% in the plant-based strategy for what we've invested so far. We're excited about a lot of the cultured clean meat approaches. We just haven't deployed any capital there yet.
Hello. Let's try that again. Hello. I'm Lisa Feria with Streiler Capital. We have over 30 investments, almost all of them in plant-based. We have 5 of those are cell-based, so we are absolutely all in. We're food tech investors, so this is the space that we play in the most.
Hi, I'm Darren Streiler with ADM Ventures. We are the venture capital arm of Archer Daniels Midland. We have 4 alternative protein investments, 2 which are fermentation-based. 1 is mycoproteins, and the 4th hasn't been announced yet.
Hi, I'm Costa Yiannoulis. I'm here representing CPT Capital, which is the family office of private equity billionaire Jeremy Collar. We've been investing in the alternative protein space for about 6 years now. We also have just over 30 investments. I'd say probably half of those are in plant-based, probably a quarter are in clean meat and services around clean meat. And the other quarter is actually in the recombinant protein space, which are companies like Geltor, Perfect Day, that are using fermentation to produce animal proteins without the animal.
Okay, great. I guess I'm curious to hear from each of you, investments you've made so far, what you have learned about what it is that consumers are looking for here. I mean, to you, when you're talking to a company, what's and when you're doing your own consumer research, what are you seeing emerging? I mean, everybody is including that word bleeding in there. Like, is that on the sort of top of the list for what needs to be there, or is it health stuff? Is it Lisa? Can you start me off there?
Sure. This category is incredibly fascinating because what we see is pulled by the consumer, right? It's not us trying to get consumers to change their habits or eat differently. It really is consumers looking for choices. And what that means is that it's not only millennials and Generation C's being a lot more flexitarian, eating a lot less meat and wanting to find plant-based solutions, but also you have the baby boomers and the older generations that are now being told by their doctors that they need to decrease meat consumption. So you have a wonderful sort of double pull on this category from both different consumer segments. And between them both, what they want are choices. I think in the 2 panels before, somebody was asking around, well, ingredient index and about salt level versus animals, and it's higher. And the truth is that the consumer wants all kinds of different choices. So you want some consumers, and some days even, the same consumer will want a product that is absolutely biomimicry. I want it to taste as almost as identical as humanly possible, but better for the environment, obviously better for animals, et cetera. And you have consumers, even maybe the same consumer on a different day, who wants to eat the veggie burger, who wants to have something with a short ingredient deck. And our job at Streiler Capital is to provide different options, because consumers are demanding a more flexible, and they're a lot more conscious about the impact of their choices, not only on their physical health, which is incredibly important, but on the environment and on animal welfare.
Yep.
Yeah, you want to jump in there?
Yeah, sure. I think, the biggest category that's driving the growth from our perspective is the flexitarians. And these are individuals that generally eat meat but want to eat less of it. And I think that's why a lot of these companies are creating products that look and feel and taste like meat. I think that, some of the drivers behind that are, the sustainability, reductions in methane gas primarily. But also a perception that it's healthier. Whether or not these products have kind of gotten to that healthier point or not, we can address later. But it's a perception that's there and it's real, and we're seeing kind of that category of consumers really drive the growth, and hence you've got all these products that are meat analogs as a result.
Costa.
Just to add, so I agree absolutely with Lisa and Darren. I think the one thing to add is that what feeds into the success of this as well is what a long way these products have come over the last 4 or 5 years, right? So Beyond wasn't available before then, Impossible wasn't available before then, which is something that a lot of flexitarians say, okay, well, I'll try it, it's great, so I'll try it again. The other thing is these products were never in the meat aisle, right? So it was always, there was a veggie section and you had the veggie burger and that was it. So the way that these things are being marketed in stores, as well as the quality of the products, I think is helping to support this trend.
You guys have anything to add in terms of what feels like it needs to be on the label to make it work for consumers?
I think we hit the high points.
Okay.
Yeah.
Have you guys seen, or what's the most interesting data point you've seen that this is moving beyond the sort of vegan, vegetarian, that core audience? How much of the growth at this point is still coming from that core audience? And where's the evidence you see that, marginal growth is coming from people who are sort of making that choice and still willing to eat meat as well?
I mean, I'll just mention some data from Beyond Meat that was mentioned in this morning's panel. Cash register data from Kroger, the largest grocer in the US, found that consumers buying the Beyond Burger, of that cohort, 93% of them were also buying other animal proteins. That's a staggering number that says this is not just a vegan, vegetarian movement. This is crossing the chasm to mainstream consumers that are making these choices to reduce their consumption of animal protein.
I think the reality is that we're facing a health crisis in most of the developed nations, where the reasons people die are not caused by famine or warfare, but really caused by the food we eat and the things we consume. And there's no way, with the extension of life and how much longer humanity is able to live, that you are unaware of that reality and the fact that you want to have a longer and better quality of life. And so I think people are realizing there's got to be, I have to do something different because of physical size or because of internal health concern and critical diseases. And so you have consumers looking for alternatives, and that could be from diets all the way to actual physical products. The top 3 Google searches in the past couple of years have all been diet related, because people are looking for ways to make themselves healthier. And so because the drive is very much around me, that's the most powerful drive, is when it's externally sourced, and when it's like the environment and we got to do better for the environment. That is a really hard thing for people to keep in mind as they're choosing their everyday food. But it has to do with, hey, I really would like not to have to take a high cholesterol medicine or to high diabetes or et cetera. That is a very motivating thing for you to think about and consider when you're choosing what to put in the plate. And more importantly, with children, obesity also on the rise, parents in general are a lot more aware of what they send and give to their children. And so in general, there's a high level of concern for health and fitness and physical size that is also driving a lot of curiosity and buying interest in this category.
I think a pretty powerful data point is just the number of quick serve restaurants, right, that have added this to their menu. And it's not just California, which you would think would be a big driver, but Burger King piloted in St. Louis, Missouri, which is a meat-centric, meat and potatoes kind of right in the middle of the country, and it did phenomenally well, right? And now it's all over every Burger King, and every other quick serve restaurant has followed suit. Yeah. So I think that's pretty powerful.
Yeah, and I just want to add to that, we just got back from vacation with the kids, and we were at an amusement park. I won't say which one, but it's run by a giant mouse. And we were waiting in line to get food, and I see this pamphlet that says plant-based menu. And you open it up, and it's every location in that park and every kind of plant-based food you can buy there. And for a place that historically served fried foods and soda and sugary beverages, I thought, this is incredible. And I'm showing it to my wife, and she's like, you're on vacation, put that away. I thought that was really interesting and really informative of where this market is going. It's not just the 2 to 4% vegan vegetarian population, it's mass market.
I guess, some of the interesting data, though, suggests that so far it is supplementing meat, and that meat is continuing to grow, and that, it hasn't yet started to eat into that. I guess, how do you, and I'm curious, I'm thinking maybe there would be some different reads on that up here, but how do you think about that data, and do you see at some point that the meat numbers, or when do you think that the meat number starts to go down rather than sort of just continue to rise along with the plant-based stuff?
Well, I hope the meat number never goes down for obvious reasons, but I think what we're seeing and what we've all been talking about is consumers want options, and that's what we see, and that's why Tyson's launched its own line of plant-based proteins and hybrid products, because there is a widespread demand for this product, right? We don't go into small businesses when we launch product lines. We go into big businesses. We're a big company. So we see a large market opportunity there. And I don't think it has to be a matter of, this idea it has to be binary, that meat has to go down and plant-based has to go up. I think sometimes we get caught up in that, and it has to be this scale. I think population growth we're saying population is going to continue to grow. Right. You also have the socioeconomic concept of an increasing middle class. In some cultures, the sign of wealth is eating meat in your diet. So there's a cultural phenomenon too that's not going to be able to be changed. Right. So you're going to have to supply both. The question is, can we do them both in a sustainable manner and be responsible about it so that the environment isn't as impacted as it has been?
So you don't see the meat number going down.
Nathaniel, I think the answer is different if you ask that question as a global number versus a U.S. number. And our thesis at Obvious is that in the U.S., animal meat consumption will decline. That we have this new kind of meat that's a plant-based meat, and as long as it is as convenient and as delicious, and it has a better ingredient label, it's better for the climate, it's better for the animals, it's better for human health, we believe consumers are smart, and they're at a huge tipping point, they're going to shift over. So our thesis is that the animal meat number will decline in the U.S.
And if I could build on that, I fully agree with James on that. I think the two key components have to do with price and availability. Right now, plant-based meats, cell-based meats in the future are still more expensive than meat. And people have a budget and they have to feed their families. And so until we hit a point where we can either be parity or be relatively closer to parity than we are today, I think it's going to be harder to make the inroads that I think the potential is there to make. And the other situation is availability. We're located in Leawood, Kansas, and so not all the products make it to us. They will eventually, but even if you go to the Walmart, which has availability of other products like Alpha Foods is here, we don't have them in our local Walmart yet. So the consumer that is looking for a type of product like that cannot find it in their local Walmart, then it's really hard to replace whatever other product that we're going to replace.
Yeah, I think you bring up a great point. I think retail prices for a lot of these plant-based burgers are kind of at the $20 per kilogram price point, for the consumer. And then obviously ground beef, a lot of you probably know the price. It's more like $4 a kilogram. So that's a big gap. And I think, it's still really a premium product for people who can afford it, right? And we need to make it cheaper, which will really open it up to the masses, I believe.
as a family office, I guess, versus a VC investor, we take a much longer term view. And I guess if you look at the tremendous toll that animal agriculture is taking on climate, resources, health, et cetera, our view is it absolutely has to go down. There's two stats that come to mind. One is dairy specific, which is, I think McKinsey did a dairy study last year that said 75% or 78% of millennials and Gen Zs had tried dairy alternative products more than twice in the last 12 months. Now, those are the future consumers. Those are the future mass market for this. So if 73% are doing it, it can't just be vegan. It's got to be kind of the broader set. And then the second is, which I'm going to quote because it supports our view that meat consumption is going to go down, is I think A.T. Kearney came out with a study which said meat consumption by 2040 will be down 33%. And I think alternative proteins, and I can't remember exactly how they define it, but will have a 60-something% market share. So.
Wow.
Can I ask, let's start with the VCs among you, because I am in neither of these categories. Do you have a projection as to when that meat line starts to go down?
The silence answers your question.
He wants to reveal our secret sauce here. We think it's going to go down faster than the industry thinks. And I think price and scale will be the key drivers. We've kind of solved taste and format, and we're starting to solve accessibility, certainly in the quick service and fast food channels and grocery. We've got tens of thousands of grocery doors. We just need to get the volume up and get the price down. At scale, it should be cheaper to make a pound of plant meat than a pound of animal meat. We're cutting out the middleman. We're so much more calorically efficient just using plants. The laws of physics say it should cost less at scale.
Yeah, I think there's an innovation aspect, which is what we look for. So new companies, the next Beyond Meat, all those companies that are constantly innovating on ingredients, right? So ingredient innovation will help drive the price down. All that is depending on food tech and food innovation, so it's kind of hard to say by when. One thing that I'm really interested and enthused by is there was, and I'm sorry if the gentleman is here, I can't remember his name, but there was somebody from Kroger and they were talking about their private label, and I thought that was really interesting because I think retailers are also expanding their plant-based and meatless options within stores. So I think we're starting to see a resurgence or I guess a surgence, if that's a word, of private label products that I think will then help start to push the market up in terms of accessibility as these other, more developed products, I should say, are continuous to lower the price. So we're seeing those things. It's very early. I mean, I think this market is very new in a way, which is super exciting to anybody who invests or creates products or has a company. It's incredibly new. It's not like we're looking past 20 years. This is history in the making. And all we can see is trends, but the trends are really encouraging.
So no specific projections as to when that starts to go down? Costa, you want to give us?
I'm not going to give a year. I don't know. But I guess from our perspective, what we do know is that the three categories we're investing in terms of making proteins in a different way are growing massively and much faster than the meat industry is. So we're going to keep investing in that, and let's see what happens.
Okay, Tom and Darren, so you guys work for meat company. Well,
yeah, I'd like to kind of take it from a different perspective. It's more so the meat industry in the Western world is about a $1.4 trillion market, right? If you look at what plant-based milks have done to the dairy milk industry, right? They now have about 13% share. It's very realistic that plant-based meats could gain 10% share of this market, which is a $140 billion industry, right? And when people talk about Beyond Meat's valuation of $14 billion, that's only 10% of the market, right? Yet maybe the valuation did get a little ahead of itself in terms of where the sales are at, but them having 10% of the market is actually pretty fair, I think, in my viewpoint. And we're looking for growth here, and clearly the growth is in this market. I'm not so concerned. Does meat go from a 2% kind of growth to 1.5 to a 1? I'm more concerned about what can this category do? How quickly can it get from? I mean, it was about $1 billion industry, plant-based, meats about a year ago, and we're talking $140 billion. I think, certainly within the next 5 to 10 years. That's the cool part.
Yeah, from our perspective, I would say, I think whole muscle tissue cuts is going to be a challenge, right? You see a lot of plant-based products that are sort of in the mince category,
Right.
burger patties, nuggets, et cetera.
Formed products.
Yeah, and they perform really well in those situations. But when you talk about a ribeye and you talk about a porterhouse, we're not there yet in this sector, and maybe never on the plant-based side, probably more likely on the cell ag side. But that's still a long ways away. You've got skeletons you have to use, and we don't know how efficient that process is going to be when you try to build out a whole cut. So, and then you have people who may want bone in, and how do you do that? So when I talk about that, I think it doesn't have to be binary. It's not because I don't think people are going to buy more plant-based burgers than meat-based burgers. I think that there are certain products which I haven't seen the capability of plant or cell to do yet to be a satisfactory analog to the traditional line product.
And I love the quotes from your company, you saying Tyson's a protein company
That's
at the
right.
end of the day. So as consumers shift their habits, if they want more plant protein than animal protein, you guys are going to try to deliver that.
Yeah, I mean,
But I don't want to let us off the hook so easily. I mean, I feel like there is a division between people who think that the meat line is going to continue to go like this, and people who think that it's going to go like that. Mm-hmm. And I guess I just want to understand, I want to try to dig in if any of you have any perception of where is that disagreement and how are we going to find out which way it's going? Because that's going to matter, whether the meat line goes up or down for everything else that happens here. How do we understand that disagreement and what decides, which way it goes?
I mean, I think the markets are going to tell us, right? Consumers are smart. They're going to make their choices. It's hard to predict exactly when, but we all hopefully will be open to facts and data as we see the numbers grow. I think there's a generational shift happening. Some panelists this morning talked about that as well. If you have children, if you have employees that are, labeled millennials or Gen Z, the numbers are pretty staggering in how they're changing their food preferences. And they don't want to purchase the same brands that their parents purchased. They don't want to eat the same foods that their parents ate. That could be a driver of this tipping point, that generational change.
Anybody else want to jump in on sort of where is that difference in opinion? Darren, Tom?
I mean, I think it depends on how much do you believe in the ability of innovation and food technology to advance these companies forward. If you believe that food tech and innovation will have a really hard time either touching separate sectors or getting the biomimicry close enough, from a plant-based standpoint, then you're going to say you're never going to quite get there, right? But I think as investors, or at least I speak for Streiler Capital, we have seen such incredible food tech and innovation in general that we feel pretty bullish that we will be able to see with amazing, talented entrepreneurs all these categories sort of start becoming, having a lot more plant-based products and get to a point where it's either indistinguishable or even preferred. Last year, actually, before this conference, we did a tour of the Impossible Foods facility, and one of the things that Pat was saying is that their goal is that in blind tests, the consumer prefers the Impossible versus the beef, nice beef burger. And, at first you hear that and you're like, wow. But then you're like, okay, that's where they're working towards. They're working towards preference. And if you believe that that's possible, then you look at other categories and you say, yeah, I mean, if you get close enough or better where your consumer is preferring it and it's the right price and you can find it, that just, to me, connects the dots enough to say that then other products that can compete against that then are not going to do as well. But it depends on how much you believe that innovation story.
Yeah, I would just say, tell me when we can get plant-based meats for $4 a kilogram to the end consumer, then I'll tell you when, I think things
that
will really
line changes.
Yeah.
Interesting. So we talked about, in general, as you said, we've sort of got taste, but price is going to be crucial. Is there something more specific that's necessary that you're looking for, to sort of make this breakout? I mean, is there something, in terms of the way the agricultural system works, or I don't know, subsidies, or is there some specific thing that you think is necessary for this to, to really break out that you're looking for?
I mean, when we look at these types of things, we're starting to look now more upstream, right? Now we have our own brand of plant-based and hybrid, so we're not going to go out and probably invest in another Beyond Meat because we now have that in our portfolio. So now we're commodity people at heart at Tyson, so we're going to go upstream. And do we look at supply chain security? Do we look at, is precision ag now interesting to Tyson as investors? Because now we're in plant-based, and how these crops are raised and nutrition and nutrient applications, do those all become important? And I think we saw the news that Cargill put a bunch of money into Puris. And so I think you're starting to see these large players starting to worry about the supply chain upstream, and saying, okay, well, how secure is the pea protein supplied? Should we be worrying about extrusion technology? What's the cold storage going to look like on this product? Because it's different than meat, and we can't put it in the same facility because they have to be separated. So I think for us, as we look at this, we're looking upstream and seeing, is there a vertical integration play now in plant-based for us? I don't know.
And I think one question is, I guess, Beyond and Impossible and others have grown now using existing, soy, pea, et cetera, because these supply chains existed and this is what's been consumed and they were used for other products. I don't think there's as much innovation that's been done early on in the crops side to say, okay, for meat analogs, why don't we look at what type of plant-based protein we grow to make that process more efficient and less costly. And I've seen both in Europe, in Israel and here actually, a number of companies coming up now to say, okay, we're going to look at trying to boost protein content or boost certain functionality that will play out when you use this as a meat analog really early on in kind of the plant-based value chain, let's say.
Yeah, I kind of think, we're at plant-based meat products 2.0, right? 1.0 was, the plant-based meats that tasted like cardboard. They've been around for a long time. Now we've got plant-based meats that, look and taste like meat, but they're not healthier, right? They're not a measurable amount healthier than eating meat. And I think, product 3.0 is something, we're working on at ADM is, how do we work with these companies, because we're one of the only plant protein houses that have both plant proteins and flavor, and we can work with these CPG brands to also make them healthier. And I think, one of the things we're looking for is how do we get these products to that point, right? Because there's already a perception with consumers that they're eating something healthier, but in actuality, sometimes maybe they're not.
Interesting question from the crowd. Subsidies, government subsidies for meat versus sort of plant-based ingredients. Is that something you guys think about? Is that something people should be spending time focusing on? Is that going to determine, is that going to be important in the outcome?
I mean, I think that there's always an opportunity for more governmental support of innovation in general. So yeah, I agree. I think that if we can get plant-based to have some governmental subsidies, that would help the market progress a lot faster, and help potentially the prices get there a lot quicker. So that would be helpful. But as we all know, the government just tends to move slower. And so it turns out the private markets are able to react a little bit faster. And so we're relying more on that. But in terms of in the camp of, boy, wouldn't this be great to have? Yes, more subsidies. So the energy, if you think about the government, different departments, there's an alternative energy department within the government who also advances, wind, solar, et cetera. Wouldn't it be great if the Department of Ag had an alternative protein department that they're also leveraging to advance alternative proteins, whether it be ingredient or, aiding the manufacturing. There's so many different ways and inputs in which the whole system can be made more affordable. I mean, I think for me as a venture capitalist, we focus on the private markets because we believe that they can innovate faster and things can move faster. But we do need this in the long term in order to be a long-term sustainable market. And even in general, for health, for Americans to be healthier, it would be something that the government really should be taking on in terms of developing themselves as well.
Yeah, I mean, I think that's in course of, what we've done in history, right? So when we developed the corn ethanol market, we provided subsidies to kind of convince farmers to do this. and kind of help prop up that industry. And now that those have gone away, I think it would make sense, right, to support farmers to grow plant-based proteins.
I'll just chime in. At Obvious, I mean, our job is to build these new, large, profitable food brands, and we've done that with Ollie and Beyond Meat and Miyoko's, and we never count on any kind of government subsidy or assistance to do that. We're, free markets, venture capital investors, but we do think about what are potential headwinds, what are potential negatives that could come from a policy, from a legislative landscape, and one of those could be a price on carbon. And it's hard to predict whether our country will ever have the guts to do that, but if we did, we think that would be a huge negative for animal meat, for animal dairy, and companies that are making plant meat and plant dairy, it makes them anti-fragile. They would actually do better in that environment. So we're not counting on that, but we do research and think about what are the potential negatives that could come from policy as well. Will these companies perform versus the legacy companies?
Beyond Meat, you don't want to talk about it, you do, but head right out of here. Obviously, actually, I think sort of interesting in this context, though, because now every company in this space just saw or imagined that their valuations tripled at the same time that Beyond Meat did. I don't know how many of you
had a lot of those
in that
meetings.
crowd.
Yes.
Yes. Does that lead you guys to back off? What do you do about that? What do you do about all the startups that now want 3 times as much money or give you 3 times as little bit of their company?
Depends on the startup. I think Beyond Meat is an incredible comp. It's an incredible proof point for what all of us on this stage have been doing in one way or another, which is proving this idea that, hey, we can disrupt this $1 trillion animal protein industry, and we can meet the consumer where they are and give them an amazing product. It was a long journey. We've been involved with Beyond Meat since 2012. That's when Obvious first invested. The company has an enormous amount of R&D that led to the innovations that are on shelf now, and also just an enormous amount of blocking and tackling to get the distribution that we now have. If you're a new startup creating a new kind of delicious plant-based food product, you have to convince investors, if you want a valuation that's somehow reflecting of Beyond Meat's multiple, do you have that same R&D advantage? Have you built that same kind of moat that's going to keep other competitors out? Not all companies have that, or it's going to take them a lot of venture capital and a lot of years to get that, so they shouldn't expect a huge valuation at the start.
Yeah.
Anybody successfully convincing startups of that?
It's been mixed.
To take it slightly differently, but back to the point, and Lisa and I, talking from the European perspective, have some battle scars trying to convince European founders to lower their valuation after they see what's happening in the US. But I think the advice we give is the same. The challenge you're having is a lot of people, a lot of new investors and new money is now coming into the space. Mm-hmm. That has exponentially grown post Beyond Meat and will continue to grow. What this means is you have a lot of people that don't necessarily fully understand the space, but think we really need to get into this. So they're willing to give money at higher valuations, move very quickly, etc. I think at least the advice we give to founders is still the same, which is it's a quality problem to have, but it's still a problem, right? Because aside from picking your co-founders and your generals, your team directly around you, picking the investor you have on board and which investors you have on board at which phase is paramount to your success. James will know the startup setup or the startup industry, let's say, is littered with companies that raised lots of money and never went anywhere. Mm-hmm. So it doesn't necessarily mean because people are offering you money at high valuations that you're going to be successful. So there's always a bit of that rationality that we try and advise. But at the end of the day, it's a competitive market, and what happens, happens.
One of our favorite lines at Obvious is that most startups die of indigestion, not starvation. Yeah. So there's a danger of raising too much money as
Even
well.
in the plant-based space.
Writ large.
Yep.
Yeah.
Not caused by their product.
No, not a literal
See what you did
metaphor.
there. Yeah, I will be less polite than Costa and say there's a lot of dumb money right now. which I think is great for entrepreneurs in a way, because if you're racing around and you're like, I'm going to throw out there $100 million even though I have $200,000 in revenues and see what bites. And they do get some bites, which is incredible to us. But then when we're coming to the table, we can't invest at that valuation, even though we love you and the company. And what happens is the situation in the next round and the one after that becomes really hard for entrepreneurs, because if you're racing at this valuation, it's not always going to be the same group of people that are going to be able to give you money for the next round. It gets larger and larger. And so as institutionals come in and look at this valuation and look at your actual numbers, you're going to see some really bad term sheets, and you're going to have ratchets and just really awful stuff that you don't want on your term sheet. You really want, and the additional thing with dumb money that you have to be watchful for as an entrepreneur is that dumb money freaks out very quickly. And so if you have hit a bump in the road, or you didn't get that one customer, that's the first money out the door. They don't want to invest in the next round. And it just becomes really hard for us to come back to the table under a situation where the entrepreneur feels demotivated because they went from 100 to 20, which is actually right size for the company, but it feels like a loss. And so it's really, I cannot emphasize this enough if you're an entrepreneur, to really understand the math in the next couple of iterations and really run the models and the situations, because when you have that institutional money coming in and they're really taking a hard look at your numbers, it might be a different conversation that you really want to have.
Tom, I saw you nodding when I said, are you convincing any investors of this? You're not, so what do you do about that?
You walk away. I mean, there's no glory in investing at too high of a valuation, no matter how great the company is. We are, as strategic investors as we like to say we are, if I don't make money, I'm not going to be here next year on this panel or the stage, right? Because now we've had our Beyond Meat exit, and they said, oh, these guys can actually make money? This is cool. When are you going to do it again? I'm like, well, hold on. They're not all going to be like this. Like, you are going to have some donuts in the portfolio, as all venture portfolios have.
That's why we have a portfolio.
That's why you have a portfolio. That's right. But we have frank, honest conversations with the entrepreneurs and say, and we lay out the math for them. We're like, okay, well, yes, you have the Beyond Meat comp, but you have to remember, when Beyond Meat listed, it was $25 a share, $1.5 billion valuation, which I feel Ethan and the team completely earned, and maybe it was actually a little bit low. The valuation today is not driven by reality.
169, I just looked at it.
Okay, can you stop, please?
But just to, I think it's important to say.
Can we just get a ticker up there? Yeah.
We're not public markets investors, I don't think, unless you guys have a trading desk at the family office. So I always say, I don't understand public markets, I'm not an expert, but I know they're efficient. So we have to let the public markets do their thing. And maybe they're saying they're very bullish on this transition from animal meat to plant meat, and maybe some of that is baked into the valuation that we're seeing in the public markets.
One quick one on this. I mean, every day there's a new large company. I guess today is Kroger's coming in with their own product here. Do you foresee a time where this becomes a commodity product so that it's just ground meat? Does this industry manage to avoid that, where you can't get premiums for being Beyond or Impossible? I mean, if somebody walks in the grocery store and sees 8 or 9 different brands, does this industry avoid moving in that sort of commodity direction?
I'm a believer in brands, and I'm biased because I vote with my checkbook and invest in teams that are building brands. But I think as long as a company can have continuous innovation, then there will always be kind of good, better, best on the shelf at retailers. And that lower shelf could be the private label or the house brand, but they'll never have the innovation, they'll never have the ingredient quality that you're going to get from the branded product. But it's our job to keep innovating, keep delighting the consumer.
Does anybody see it going in the commodity direction?
I think you need part of it to be commoditized. That was beautifully answered. You do need a part of it to be commoditized, because consumers buy through that range for everything, right? From meat to other categories. You have the commoditized, cheaper product all the way to like the nicer, fancier branded product or whatever it is. And so I like that. I want to see some commodity products come up that people can find anywhere.
Yeah, I think there'll be categories, right? There'll be a commodity line. There'll be a cell-based Wagyu beef, right? There'll be, all different lines, just like there is in the beef market.
We do a lot of work with Kroger, with Whole Foods, with Target. These are really smart retailers. They have private label brands, but they care about SKU productivity on the shelf. They measure with great rigor how many dollars per week per square inch on that shelf are they getting. And a premium brand that can command a premium price, that's better SKU productivity for the retailer. They're never going to kick those brands out.
All right, I want to do, because we're almost out of time, I want to do a couple sort of lightning rounds on just the future. The next biomimicking, we've seen meat, you're starting to see dairy. Is there some next biomimicking area that you're interested in or watching carefully?
Seafood. I'm going to shamelessly plug our latest investment we just announced today, New Wave Foods, which is a plant-based shellfish alternative. Initial focus on shrimp, moving on to other crustaceans. I think it's a really interesting market. I think as Tyson is a protein company, it's an important area to use ventures to explore. If you look at seafood consumption around the world, it's larger than terrestrial protein. So for me, that's where it's at.
Seafood's been something we've looked closely at. We're also interested in mycoproteins, technically not plants, right? Neither plant nor animal. But in terms of efficiency of growth, the world of the mushroom is really, really interesting.
Same.
Yeah, mycoproteins I think are fantastic, both meat and dairy analogs. I think today, for dairy analogs, to me, that's an area where we've got some pretty cool companies coming up in there.
So seafood, and I think eggs as well. So Just's the one company that's done a scramble, but I think eggs are used in a lot of things for functionality, so I think there's definitely some white space there.
And then with our last minute, is there an ignored area in this all, or something that's particularly important that you think people are ignoring, whether it's gelatins or the pea protein, or where are you focused on a sort of ignored area?
Manufacturing processes, right? Traditional food processing equipment is not really built to do what we need it to with plant-based. So that's important, and also ingredient diversification.
I would, dairy's been mentioned a little bit, but I would just mention that a lot of the focus of this conference has been on, meat, but we think we're doing work. We're co-investors in a company called Miyoko's Kitchen. We think that the dairy slice of the plate is a really, really big one. There's a lot of exciting innovation. There's some really delicious, nutritious alternatives to bovine dairy that are coming.
I'm excited about seeing more options in shaped products, whether it be steaks or anything in that direction, little ribs, like anything shaped is very intriguing to me. We're going to be looking more into that.
Yeah, I'd say not so much an ignore area. It's an area that's today somewhat unexplored, is how do you take a fermentation-based method of manufacturing dairy protein and going full commercial scale, right? Putting it in a 250,000 gallon fermenter, and today no one's done that, and that's something that we at ADM are definitely working on.
For us, I think two areas. One I mentioned earlier, which is looking from a plant-based perspective right at the beginning. What can we do to crops? What can we do to the way they're processed so that they're more efficient at biomimicking animal products? And the second, which is I think a lot further out there, is this whole movement now of de novo proteins, which is effectively designing new proteins that don't exist out there. So we've been eating animal proteins for many years, so naturally we will try and mimic those and produce those. But why not design, with microbiome research and other things, proteins that are tailored?
Very cool. All right. Hopefully I got a lot of that. Thank you, guys. We're out of time. Enjoy the rest of the conference, everybody.
Great. Thank you.
Thank you, guys.